Welcome back. We are continuing with our section of advanced candlestick types, and in this section we're going to be looking at advanced bearish candlestick patterns. So we're going to be looking at bearish reversal patterns, namely the 3 black cross, the inside down, the upside 2 cross, the bearish abandoned baby, the advanced block. Then we're going to look at 2 types of bearish continuation patterns, which are the bearish marubozu and the falling 3 methods. These advanced bearish candlestick patterns, they don't normally appear on the chart, but the moment you are in a position to identify their formation, they can be very useful patterns in terms of trading reversal patterns or continuation patterns. So candlesticks should provide different visual clues that make understanding price action easier. Different time frame trading with Japanese Candlestick Chart allows traders to better understand the market sentiment. In my opinion, Candlestick Chart offers a great depth of information than traditional bar chart. With bar charts, high and low are emphasized more than anything else, while Japanese candlesticks give emphasis to the relationship between the opening price and the closing price. Traders who use different candlestick patterns should identify different types of price action that tend to predict reversals or continuations of trends. Additionally, when we combine them with other technical analysis tools, we should get an accurate estimate of possible price movement. Keep in mind that advanced candlesticks might be also valid, profitable patterns in stock trading. As with all candlestick formations, if you manage to identify it trading off of a strong area of supply or demand, you might assume it is pretty reliable, but don't rely on just candlestick formation. Back it up with other tools and create your own strategy. Whenever you are in a position to highlight a pattern that is formed, make sure you've got other criteria that you have to consider in relation to price action, so that you can back up your analysis to a more favorable trade. In this section, you will learn to differentiate between various advanced bearish candlestick patterns. So firstly, let's look at the 3 black cross. This is a bearish reversal pattern which consists of a 3 candlestick formation. Market will be mainly characterized by an uptrend or a strong bullish momentum. 3 consecutive normal or long bearish candlesticks are seen on the chart. Each candlestick opens with the body at the previous of the previous candle, as you can see on the illustrated chart. Candlestick progressively close at new lows below the preceding candle. This signals a very strong bearish move in the market, meaning you should be in a position to be hunting for short trades whenever you have highlighted that we've got 3 black cross on the chart. Now let's look at the 3 inside down. This bearish reversal pattern consists of a 3 candlestick pattern formation. Market will be mainly characterized by an uptrend or a strong bullish momentum. We see a bearish harami pattern in the first two candles. Remember the harami pattern, the pregnant woman. After that, we see a bearish candlestick on the third candle with a lower close than the second candle. Now let's look at the upside two crows. This bearish reversal pattern consists of a 3 candlestick pattern formation. The market is characterized by prevailing uptrend or bullish momentum. A normal or long bullish candlestick appears as the first candle in the formation. The second candle is a short bearish candlestick that goes up. On the last candle, another bearish candle opens at or above the open and then closes below the close of the previous candle, though still above the close of the first candle. This pattern is a variation that is shown in the chart below, as you can see on the illustration. When the third candle closes below the second one, it shows a variation one of the pattern. Now let's look at bearish abandoned baby. This bearish reversal pattern consists of a 3 candlestick pattern formation. The market is characterized by an uptrend or a bullish momentum. A bullish candlestick is observed as the first candle. As you can see here, we've got a strong bullish candle to the upside. That is the first candle that has to be observed. Then we see a doji on the second candle. You see here, we've got a doji, price rejecting higher prices, whose shadow stretches above the upper shadow of the previous candle. Third or fourth candles bearish candlestick gaps in the opposite direction with no shadow overlapping. This is the third candle. Thereby you'll be looking for a strong momentum to the downside. Now let's look at advanced block. This bearish reversal pattern consists of a 3 candlestick pattern formation. The market is characterized by an uptrend or a bullish momentum. A bullish candlestick appears as the first candle. The next 2 candles are bullish candlesticks, with each closing above the previous candle's close and having an opening with the range of the previous body, as you can see on the illustration below. Now let's look at 2 types of bearish continuation patterns that you have to be well aware of. We've got what we call the bearish marubozu. Marubozu defines strong sell off the resistance or strong buying of the support. Marubozu is also known as momentum candles. So when you highlight or when you see a marubozu forming of a resistance, it means you have to be hunting for short trades. And if you see a marubozu forming at a strong support, that means market is signaling what? Strong buying. Then you have to be hunting for long trades. Now let's look at the following 3 methods. This is a bearish continuation pattern. This reversal pattern consists of a 3 to 6 candlestick pattern formation. The first candle in the pattern is a long black candlestick with a defined downtrend, as illustrated. A long black candlestick creates a new low, which shows us that bears or sellers are back in control of the direction. So you'll be hunting for short trades. There are only two groups of people in the forex market, like I've been saying all along. So we need to be in a position to identify who is in control, who's controlling the market. Is it the buyers or the sellers? The moment you're in a position to identify that, then you move on to your market structure. Where are we in terms of market structure? Are we at a supply zone or are we at a demand zone? From there, you go to the next step. You identify your candles that are forming. If there's no clear direction or if there's no clear pattern that you can see, then you move on to the next asset. Don't force the patterns. Don't be in a position to just say, oh, now I've seen a bearish engulfing on a 15-minute time frame, so I should trade to the downside. No, it doesn't work like that. Be that type of trader who can be in a position to analyze and scrutinize the market. So in the next section of the course, we will be looking at advanced bullish candlestick patterns. Thank you.